Good morning, YouTube. Good morning, everyone. Good morning, Trade Pros. Hope everyone's doing well. Hair is wet as per every update I do. We've seen the market downturn quite a bit over the past 2 weeks here, and the continuation happened overnight as well, right? Once the Globex opened, we got a pretty strong downshift. Once we enter that distribution that we were talking about, honestly, with our team, we talked about this even on like Twitter. If you guys go check us out there, but we talked about the distribution that opens up under 39.75. You open 39.75 and the targets become 39.50, and then below that you actually exit that distribution and look for the next move lower. So before I talk too much about levels, there is quite a bit of news to talk about that happened overnight over the last few days, right? We're going to talk about Michael Burry. We're going to talk about oil and energy. We're going to talk about the chips, right? Which the chips were one of the catalysts that actually helped a lot of this downside actually show up last night. So let's talk about that and some of the news that hit NVIDIA right after the market closed pretty much. So first of all, I do want to talk a bit about the big shorts, Michael Burry, right? This guy has been a prevalent figure. He's been made very much more public after we saw The Big Short, the movie, right? Michael Burry has been fairly bearish time and time again, especially on individual names like Tesla, and now he's calling for this quote unquote super bubble to pop. He said that the market silliness, quote unquote, is back, and he's also He's also warning to prepare for an epic finale in this market to the market cycle. He also argues that the current super bubble in asset prices hasn't deflated yet, but appears to be dangerous and close to that final act. So some have also compared Grantham and Burry to a broken clock, right? That is right twice a day. Realistically, how many times have you seen Michael Burry call for this? Even in the movie The Big Short, he was a little early on the case, but he had something going there. So it's just interesting to note. It's not one of those things where we see Michael Burry short everything. It's been the case for quite some time now. So he's been talking about the Super Bowl since the pandemic started. Obviously, that those quick catalyst events that shoot the market down are very rigorous and have repercussions based on what the Fed has been doing, right? The quantitative easing and the artificial inflation of a lot of these assets. So we've also seen what else do we have? We have a few quotes here. I do want to read them out because they're fairly interesting. But one of those features is the bear market rally after initial derating stage of decline, but before the economy has clearly begun to deteriorate, as it always has when super bubbles burst. This is what Grantham said, actually. And he wrote in a fresh research note. This is in all three previous cases recovered over half the market's initial losses, luring unweary investors back just in time for the market to turn down again, right? Only more viciously and the economy to weaken. So this summer rally fits the pattern perfectly. Now, another thing, if you notice, I've seen this a lot, like it's been published by Bloomberg a decent bit, but if you take a look in terms of the 2008 downturn in comparison to what's going on right now, you'll see that the trend aligns fairly well. Even in 2008, we had, I think it was around 7 quote unquote bear market rallies that rallied between 15 and 20% off their lows before we finally got that cataclysmic downturn. So it's going to be something to watch out for very carefully. We've had multiple days of aggressive selling and on pretty thick volume that we hadn't seen on a lot of this rally. So Grantham also says, my bet is that we're gonna have a fairly tough time of it economically and financially before it is washed through the system. What I don't know is, does this get out of hand like it did in the 30s and is pretty much well contained as it was in 2000? So as it is somewhere in the middle, where do we go from here? So the US stock market remains very expensive, and an increase in inflation like the one this year has always hurt multiples, although more slowly than normal this time. But now the fundamentals have also started to deteriorate enormously and surprisingly. Between COVID in China, the war in Europe, food and energy crises, record fiscal tightening, and more, the outlook is far grimmer than it could have been foreseen in January. So this is what Grantham says. Now, there are a lot of things that I do agree on in this scenario, because the main target here is the inflation that has artificially inflated a lot of this money and assets. A lot of these ratios, these PE ratios, these price multiples have been overinflated. And from a fundamental perspective, those do get corrected, and we start to see that downshift that kind of evens and balances things out. Now, from an economic standpoint, we've seen one of very triggering events. George talked about this yesterday, actually, in the slowing of hiring process. When unemployment peaks and hiring and even firing begins, that is a cataclysmic move for a deteriorating economy, especially now with taxes starting to increase, the Fed's massive tightening cycle. So we'll see with consumer debt rising aggressively, we'll see how we shape up into the coming weeks and months. But realistically, the low is not in this market. The one thing about the consumer spending and those debt cycles is that with inflation, a lot of assets have been pumped up. And realistically, when something costs X amount, even if inflation drops, it's not going to drop with that inflation. It's now going to be X amount with the inflated number. Now the thing is, people are so used to consuming at X price, they're probably not going to change those habits, which has increased a lot of that debt. So there's a lot of a lot of different factors in play here, and that ties into also one of the core inflation numbers as we talk about energy. So energy, there's a lot of news that's been hitting the energy markets recently, which in turn is hitting prices. So reports now suggest that OPEC Plus is not looking to cut crude production, and while a renewed Iranian nuclear deal could push more barrels onto the market, the G7 finance ministers will also meet virtually tomorrow and are expected to endorse a plan to set a cap on the price of Russian oil and commit to finalize and implement this. So this is going to have a huge effect on those oil prices that are expected to rise, energy price expected to rise into the end of the year. Right? We've already seen how aggressive the energy prices have risen in Europe. I've seen personally multiple different energy bills from European small businesses and companies that have more than tripled over the summer, making it nearly impossible to actually run these businesses. But the question is, how will this cap work? So details are still being discussed. There's nothing necessarily set 100% in stone, but they would likely be implemented close to the cost of Russian production, thereby denting Moscow's finances, but still ensuring critical energy flows. So to accomplish this, Europe would restrict the availability of transport and insurance services to shippers that agree to observe the price ceiling, which is around 95% of the world's oil tanker fleet, is covered by the international group of P&I clubs in London and companies based in continental Europe. So another proposal would also apply to similar caps on Russian gas prices and limit the usage of U.S. financial services that could also benefit this scheme. So we've seen that WTI crude dropped under $90 a barrel on that news after posting a third monthly decline in August. So it's the longest streak since April 2020. And the sentiment has also flowed into September, with WTI down 2%, about $87 at the time of me looking at this. I don't know exactly what it is right now, but energy traders anticipated a brutal period for global growth. And we'll see how this shapes up, because I know a lot of big banks have also been forecasting an aggressive surge in those winter months in oil, which could impact those inflation numbers and in turn push the Fed to continue their tightening policy. Because as we've seen throughout the Jackson Hole, the Fed's number one concern right now as it stands is going to be that inflation number. So let's see what else we have. Last night, into the close of the session, NVIDIA, right? NVIDIA shares down 6%. They almost tagged the yearly low after warning that U.S. export restrictions on some of its products may hurt sales. So according to an 8K filing, Washington has imposed a new license requirement for any future export to China, including Hong Kong and Russia, of the company's A100 and H100 integrated circuits. So the latter is NVIDIA's forthcoming flagship chip that was announced earlier this year, which is going to put a big dent on revenue, dent on the price of the stock, which we've already seen, and a dent on semis in general, which have a very close relation with the S&P, which is one of the catalysts that actually brought this thing down. So in the bigger picture, Chinese organizations are reliant on cost-effective chips from NVIDIA and others to carry out advanced artificial intelligence tasks like image and speech recognition. So the chips are also used in the military a lot. They have a lot of military applications, such as scanning satellite imagery for weapons, bases, or filtering communications for intelligence gatherings. And the U.S. government feels that new licenses are required to mitigate a lot of these risks. So we'll see how Nvidia shapes up. We've also seen that AMD has dropped as well. It also, geez, it's my dad's birthday today. He's calling me right now. But it also warned that it received a similar note from the U.S. government. AMD did, though it doesn't see a material impact just yet. So we'll see how that shapes up. These chips are very close to lows of the year. And speaking of that, the market has dropped very significantly here overnight on a lot of this news that we've just talked about. And I'm just going to take a look at this and give you guys, shoot some numbers at you, because what we've done is we've accepted under in the futures the 3975 distribution, and the target for that distribution was 3948 to 3950. Now that we're below that, we become an area of imbalance and look to accept under yet another distribution, which is 3930. You accept under 3930, especially under 3920, we're into a new distribution block that takes us into 3885, 3883 in that area. That's going to be the target to the downside and the massive support. As long as we hold out 3940, that's my first area to look to see if shorts can accumulate. If not, the 3948 to 3950, I want to see if shorts can accumulate. Otherwise, if you bid through those levels, you just accept into a new distribution to the upside. But I am leaning a little more to the bear side with the potential of a pop off the open to see how these buyers kind of interact with these prices that they've seen become fairly cheap overnight. So again, to reiterate, 3920 is going to be a first major support that I want to see price hold out for a little pop here pre-market, or I guess at the beginning of the session, so we can look for short levels into the 40 and into the 50, right? To see if we can bring that down, because if we accept back below this 3930 distribution block, the 3885 is going to be a major target area. So that's what I'm watching for this morning. Usually when we have a downturn like this, you do expect some kind of buying to open up in the morning session right off the open to kind of gather new shorts to get into this market and see if they can actually press down into the lower ends of these distributions. So, geez, why is my hair like this? But that's what I have today. Let's open up these rooms and we'll see how prices shape up. There's still a little more bearish sentiment. There's a lot of market maker positioning that opened up this week more to the bear side, leaning bearish, especially under that 3975 area. Huge level. And once we cross that, there was a lot more bearish tone in this market. So keep that in mind going forward, and we'll see how this shapes up. So, oh, wow. Ad says Nat Gas in Holland went up 10x year over year. That's insanity. So a lot of these energy prices in Europe are getting affected really hard. A lot of these bills I've seen those bills. There was one Italian, it was like an Italian small business. It was on Twitter. It was trending. And last year in comparison to this year, July, his energy bill for the small business, I believe it was like 100,000 euros. Now I'm going to fudge these numbers. I think this year, it was closer to €1 million for that same energy bill in the same time period. So absolute insanity. If this continues in the winter months, it's just going to wreck a lot of things, right? A lot of small businesses that are getting exploited like this. So let's see how these restrictions on Russian oil prices come to be. And we'll keep an eye on what happens with these chips as the market continues to look for that downshift. Do we get a new low right now as September turns? We'll see, because we have Labor Day coming up. It is a long weekend. I'll see you guys next week. But Monday is off. Markets are going to be closed. And institutional money starts pouring back into their desks after Labor Day. So a lot more volume has already commenced in this market. It's already come into this market. And a lot more volume is going to come into the first 2 weeks of September. So keep that in mind as volatility starts increasing and movement starts increasing, and so does opportunity. So come check us out in our live trading rooms. We're going to open the futures and the options one. And if you want to learn more about this stuff and more about trading derivatives, you can check out the website where we have 2 masterclass on options and futures. So we'll see you guys next time. Enjoy the long weekend and trade defensively into the end of the week. We don't want to ruin those profits, especially coming into the long weekend. We want to be smiling into the long weekend. We want a few drinks and have fun. And I'll see you guys next time. So thank you and take care.